All right, hey there, Chris Franks with Texas West Capital coming at you guys live just a few minutes after 11 a.m. Central Standard Time here on Tuesday, the 21st of February, 2023, after the long holiday weekend here in the U.S. President's Day, of course, yesterday, so U.S. markets were closed, as was TWC. But, as always, guys, or just about always, our members, of course, I updated the Bitcoin chart a few different times during the weekend. So, it's never a guarantee, but usually that's what happens if things are going a little differently than what we expect there on Friday. So, hopefully you guys that you're in Discord there, you guys were paying attention to that. How's everybody doing? Y'all doing all right? Oh, man. So, I got to be honest, I've been struggling a bit here lately, last probably month or so at least. A lot of fatigue, a bit of brain fog, stuff like that. So it looks like like I'm probably dealing with long COVID. So I do apologize if I get a little behind in things right now, guys. I'm trying to work on that, doing what I can about it, but I couldn't figure out why the heck I was so fatigued every day. It looks like that's probably what it is. So hopefully it's something that goes away, before too much longer. But I just want to kind of give you guys a heads up with that. It's been right the last week especially, probably 2 weeks especially. It's been kind of tough on that. I don't know if you guys have had that or dealt with that before, but man, it sucks. It sucks, especially for somebody like me who's used to being so productive all the time. Man, it's tough. It's tough to work through that. So who's here already? We got Hank, we got Claudia, Nevlusian, Bamboo, Melissa. What's going on, y'all? Fibo's here. Ryoshi Research says, are we going back to 19K? Bears are euphoric again. They always are, right? The minute it gets a pullback. But why? You make sure you guys understand. I'm not here to make fun of anybody. Just so you guys know. Even when I mention people like Profit Blue or Copper, I'm just trying to make fun of them. I'm trying to help everybody understand the psychological process that people are going through. And then, of course, now, again, some of these guys, I think it may just be that they're just, farming engagement guys, trying to get those followers numbers up so they can make a lot of money as an influencer. It's possible they could be as bearish as they seem, but, man, it doesn't make a whole lot of sense. Here's the one thing, guys. If somebody you're watching, it's okay if they don't agree with you or you don't agree with them or whatever, but make sure they have invalidation levels. If somebody goes on there and says, "Oh yeah, this is what's happening," because usually they seem to be more guaranteed than not, right? They're always, "Oh yeah, this is definitely happening," right? But then they don't have an invalidation level, or that invalidation level keeps changing. Be skeptical about them, guys. At the end of the day, whatever you do is on you, period, end of sentence. I don't care what somebody else says or what they say they think's going off the markets and whatever. Whatever the actions you take are on you, okay? So you need to treat it like that. You need to take responsibility for it. Don't blindly follow people. Even me, I've told you guys this ever since I've been doing this, almost 5 years, something like 5 years now, beginning of 2018, right? I had my first wave with YouTube, and I got cut off. You guys remember that? Midstream, they just deleted my channel and everything, cut me off, and then it took 5 or 6 months to finally get back on there, and I've started up again since then. But man, that was crazy times. But I've always told you guys, don't even just blindly follow me. Don't blindly follow anybody. You have to learn to do it, guys. You are not going to become however rich you want to become in your mind from trading by following somebody else's, signals all the time. Signals can be okay. Here's the best thing about signals, guys. Signals can give you a place to start. Okay? This is the best thing I can say about signals, okay? Is they give you a place to start. They give you a possibility. But you still have to go in there and say, okay, does that make sense to you as a trader, right? To do that. And sometimes you might get an entry signal and it's some target, but you might look at it and go, no, I'm more comfortable with this target, something lower down. That's perfectly fine too, guys. Use signals as tools, not as end-all be-alls where you don't have to think. You always have to think, guys. You always have to think, okay? Let me see here. So yeah, we'll talk about that in a minute here, where we think we're headed with Bitcoin and them. Hank, you're dealing with it too? Yeah, it's a pain in the rear end, man. It sucks. It didn't even cross my mind that's what it may be. I was just, for like weeks now, I've just been so freaking just, it's been crazy, guys. I've never been this fatigued in my life. And I'm nearing 50 years old now. God, it's so crazy to say that. I have to laugh. That's so crazy saying 50, but, because you don't feel like, hey, y'all that are young out there, you're in your 20s. I'm telling you, you think 50's old. Wait till you get up here. You don't feel like it. You're like, oh, okay. You still feel like you did when you were younger. You're just smarter about things, hopefully. But yeah, man, I've never felt so just absolutely worn out in my life. It's crazy. Let me see here. Kimazabi, what's up? Aeroquin says, TWC to sell merch. The only thing you can control is your risk. Trading is simple, not easy. I wear a medium. Hey, you say that. We're about to launch. We got a product line we're going to be launching here probably in the next few weeks, guys. Finally got around to getting that all set up. So if you would really like TWC merchandise, man, stuff like that, we're going to have some stuff starting to come out for you guys to jump on there. Let me see here. Fibbo says, I tell people to ask questions and challenge them, and if they do not have answers, then politely leave. Yeah, I mean, really, guys. If you're new here, maybe you don't know, but if you've been following me for a length of time, I'm a big proponent of doing the work, guys. You got to do the work. In life and trading, you have to put in the time. You have to put in the work. And it's not good enough just to do something, just to be busy. You have to do the right thing. You have to practice, but you have to practice correctly, right? If you practice doing the wrong thing over and over again, you're going to get good at doing the wrong thing, right? But listen, guys, here's the thing. When you do this, right, it's what most people don't want to do. It's the same thing in life. Whether you're trading or in life, it's the same thing. People don't want to put in the effort. They don't. It looks, it smells, it feels like work. And people are allergic to work for some reason. Guys, let me tell you, there's so much you gain in you, right? In your psychological and emotional strength that you get from accomplishing a thing. Whatever it is. Trading is just one of those things, right? But you guys, you got to put forth the effort. You've got to do it. I talked last week about an individual who discussed, that we're really kind of getting, our comfort level's way up here, and our discomfort level, we don't like to be here this little bit, right? And it's really bad for us, not just health-wise, right, physical health-wise, but also in terms of our brains, of our neuros and everything throughout the body, right? All these things are meant to be stressed. And I don't mean stress like living like, oh my God, I'm so stressed out. But I mean like they're, effort where they have to be used against force and honed and become better. I mean, this is, gosh, man, it's one of those things, right? So, don't be scared to do work, guys. Don't be scared to put in the effort and the time. You're going to get it. It's going to be an amazing, especially in trading, guys. It's such a great life that you can live as a trader, right? But you have to do the work to get to that point that you can do that. It's not going to happen magically. Stop believing everybody online that tells you it's easy and it'll happen overnight and they'll show you something that tomorrow you'll be rich. It's all stupid, guys. They're telling you what you want to hear because they know that if they tell you that and they sound convincing, you'll give them money. I've never done that. I've always told you the reality of being a trader, guys. It's not that it's bad. The reality isn't bad, but it's more than what most people really want to put forth. They think, it's just something that they can just, get overnight. But you can't do that if you want to be good at anything, guys. It doesn't happen overnight, right? Let me see here. Bamboo says, yeah, Gareth Soloway, who was with you on the Wendy O show, is uber bearish for Bitcoin. Says it will go to 12K or lower. I mean, guys, again, anything's possible. Right now, there isn't anything happening right now that says we have to drop. See, this is the thing. People like something happens and they think, oh, they go to the extremes, right? No. The only thing that's happening right now says maybe we might get a pullback. Now, if it continues to, be significant in that pullback, depending on how that pullback looks, we could potentially go lower. But right now, there's absolutely nothing happening right now in the chart. Up through the weekly, man. The weekly, guys, we're going to show you in a minute. The weekly, we've made we've broken out above that weekly bearish market structure, guys. So there's nothing going on even on that large weekly time frame yet that says we definitely have to go down lower. But we're at a point right now that if we do happen to pop out higher, we'll add a lot of confidence to the idea that the bottom's probably in, okay? YouTube marks your old videos as private. Maybe they're still there. I'll have to check again, man. That's awesome if that's what's going on. You'll have to check on that again. Let me see here. Hey there, Diego. Good to see you, man. Let's see here. Oh, you've had long COVID for over a year now, Hank? Oh, man, I feel for you, man. Yeah, I was looking at how long that was going to last. They said weeks, months, or a year or more. I'm like, God, please don't let it be a year or more. I can't do that. Hey there, Andrew. Good to see you, man. Have fun with that training, buddy. Do I think that fatigue is also linked to the recent injury? That's a good question. I hadn't thought about that yet. It could be. It could be. Yeah, I mean, like I said, I hadn't even really considered this whole long COVID thing at all until just recently when I was just trying to figure out why the heck I was so dang fatigued every day. That's an interesting thing. Oh, that sucks. So, because that hurt. Melissa says, hard, smart work is a talent. Yes, it is. That's right. That's right. Being able, guys, listen, Melissa just said something great here. It's a talent to be able to work hard and work smart, do these things right, to be able to say, yes, I'm going to put forth the effort that I need to put forth and then to do it. That is a talent. That takes so much more effort than most things you do. And so to be able to do that, because again, most people take the easy way out and they don't do it. So to be able to actually do that is something you should be proud of. It's something you should push for sure, for sure. Jeffrey, what's going on, man? Thoughts on this 4-hour Bitcoin ascending triangle some traders are following? Yeah, we'll look at that in a moment. Here, I've got an interesting idea about that, I think, of what you're talking about. Let me see here. Let me kind of catch up with you guys. Okay, so hey, listen, you can join our mentor program here, guys. It's on howtotradetowin.com/LMT. There's also a link now that I've put on here that you can get right here at the top to get to it. If you're interested in doing that, of course, right here. But that's what we're doing here, guys. This gets you the biggest thing, and the people in it are starting to say this already. They've noticed that the biggest thing they're getting us, even though they've got my trading system and other things we're doing in there, but they're noticing that the biggest part of it is working through the emotions and the psychology that they've had to deal with. And that's the thing, guys. That's what it is. I always tell you, trading's simple. It's not easy. It's simple because you're just going, through pockets of liquidity, basically, right? You're just going through supply and demand. But it's not easy because, you've got that whole emotional and psychological side of you that you have to deal with, and most people don't deal with it very effectively. So yeah, that's a fantastic thing we're going through there. If I hear hoof steps, think horses, not zebras. Long COVID is a thing and the symptoms match. No need for weird explanation. What? Tell us some best trading books. Hey, I've got 2 that are going to come out this year, so you guys be watching for those, okay? But really, Ryoshi, man, anything that has to do with the original works of Wyckoff. Here, let me see. I have to always think about what this link is. I actually have a link of books here, guys, that I would suggest. Oh, one of the other books that you should definitely read is the I have to think real quick here. I've got it right here. I'll look at it. The Socioeconomic Theory of Finance. Okay? You've got to do that. I mean, it's just, here, look, here's the link. I put together an Amazon just because it's easy to link them in there. We make like a few pennies if you guys ever buy anything through there, but it's just really for the list. But it's amazon.com/shop/Texas West Capital. And I've read all the books that are listed in there. I've read a lot more, obviously, but those are the ones that I think, if you're really interested in learning more about markets and trading, they're really going to help you out, I think. But of those, the Socioeconomic Theory of Finance is amazing. Dark Pools, The Rise of the Machine Traders. And I can't remember. I can't see what the rest of it says, by Scott Patterson. That's a good one for understanding a lot of the trading that goes on behind the scenes, guys. Okay. If you're interested in options, futures, and derivatives, there's a book by Hull in there, John C. Hull, called Options, Futures, and Other Derivatives. Elliott Wave Principle, A Key to Market Behavior, is a great first start for Elliott Wave. And then, like I said, anything by Wyckoff. So Wyckoff, they're really inexpensive, these original books. Like they're $7 and $9 and whatever. But How I Trade and Invest in Stocks and Bonds, Studies and Tape Reading. The Richard D. Wyckoff Method of Trading in Stocks. My Secrets of Day Trading in Stocks. That one's $5.95. So Stock Market Technique numbers 1 and 2. Those are great ones. Jesse Livermore's Methods of Trading in Stocks is also another good one. But anyway, yeah, so I've got those and a lot more in there. If you're really interested, life is about cycles, guys, because we are human beings. We're organic species, right? And so anything that has to do with cycles, again, Elliott Wave's a good one. K cycles, contractive cycles are good. I've got books in there on that as well. If you're interested in, well, there's a book in there called Markets and Profile Profiting from the Auction Process. That's a good one. You can look at that. Trading psychology books in there as well. There's just a lot of stuff in there, but really the ones I mentioned are definitely some of the first ones that you should be kind of interested in that. All right? All right, hopefully that helps, guys. Okay, so let's jump over here. This is the DXY, guys. This is a dollar. As you can see, got rejected the weekly pivot there on Friday. Came back down to what is now the hourly pivot, trying to find some support on here. We rallied up to the weekly pivot, got rejected again, pulled back again. We want to see a breakdown below this this hourly pivot, right around 103.7 or 71 or so, okay? We want to see a nice impulsive breakdown through there. What do I mean by impulsive? Well, you can't really see it on the DXY chart here. You can see it on the DX1, X1. There we go. There is a futures market for it on the ICE exchange, okay? Oh, doggone it. Did not mean to put it there. Meant to put it over here on this one. It's got all this crazy old stuff on here. Get this changed for you real quick, guys. DX1. Now, why would you look at the futures? Well, because the futures have something that the other chart over here doesn't have, and that's volume. See that? So this is the volume here, and of course, this is the other regular chart, which doesn't have the volume. So, but yeah, again, you can see this rejection here at the pivot, right? At the monthly, weekly pivot there. Now, will it hold as resistance? We'll see. Let me pull out here the weekly. There we go. The weekly is trying to push out into overbought here for Stochk RSI. RSI never actually hit oversold. If we can get a rejection here and a breakdown below this swing low at right around 100.68, that should get us down here toward this S1 pivot at about 90, almost 94, just below 94 here. And in that case, more than likely what we get is another rally up toward the pivot and then a breakdown further. It'd be a continuation of this downtrend. I don't really see anything going on here that it's really bullish. I mean, if I'm looking here at the weekly, it looks like 1, 2. Let me do a quick count here. Looks like 1, 2. Let's see. And then, let's see, 1, 2. Can I take this down a bit here for you guys? 3, 4, 5. And they give us a 3. And then potentially, I mean, just look at the weekly here, potentially a 1, 2, 3. Oops. Nope, sorry, that was the wrong way there. I was like, what the heck am I doing? There we go. 1, 2, 3, 4, 5. So we're kind of looking at this, okay? I think this may be what we're looking at, or we're seeing a 1-2, 1-2 type thing. But here's the thing: if this is correct here, basically wave 2 usually tries to find that wave 4 of the lesser degree, right? So that's usually where we're kind of targeting. So, could it come up further? Sure. You can see it's right there at the 38.2, right? So I could potentially see some rally up there toward 106 even. Doesn't have to get up there. Can get rejected right here. But generally we look for a wave 2 to reach wave 4 of the lesser degree, okay? And so we're going to look for a rejection anywhere from here to that 106 and 0.06 kind of area. If we can get that and a breakdown below that swing low, then things get kind of interesting. Now that would take it even further below than, obviously, even if we went up here, then right here, right? I mean, this gets you 3 down here at about 83, right? Hey, Hank, look, 80s. Low 80s. But in that, what you'd probably get then would be this idea of this 1-2 kind of thing, right? So you get like a 1 down here, a 2 back up, comes down. But like I said, this could even be a 1-2, 1-2 kind of thing going here. But ultimately looking for price to get rejected somewhere between the weekly pivot and basically this high volume node here, right around 106. We'll say 106, almost in a half there. So really just looking for rejection in this area. And if we can get that in a breakdown below the swing low, then we should be looking toward the S1 minimum on that next move down. Okay? So, I mean, that's kind of where we're at. Let me see here. Boss Jam, what's going on, man? Informational long as always. My streams, yeah, they are, aren't they? But that's the great thing about it, guys. My streams are as long as they are, right? But that's because we give out so much education, so much content, right? Some people, a lot of people get in there, oh, it's too long, it's too long. Well, this is the same people who just want to be rich overnight, right? And they don't understand, again, what I was talking about earlier about having to put in the time and the effort and all that. So I appreciate you guys that are here, and sticking through it all and hopefully picking up a lot. I give out so much free alpha. I don't even know if you guys recognize it all the time, but a lot of it. I do a lot. So hopefully you guys are paying attention and picking up on it. Drewsfield, what's up, man? Good to see you there. Hank says mid-80s is programmed. Let's see here. Oh no, I don't trade the dollar, Hank. I don't trade the dollar. I said people can if they want. That's where they would trade as the ICE exchange. I don't actually trade the dollar itself though. I just use it when I use it as an understanding of overall risk, right? Because if the dollar's rallying, then risk is kind of risk off, and if is risk on, and then if it's dropping, it's usually risk off. So that's what I use it for. John, I appreciate you, man. I appreciate you. Okay, guys. So yeah. So I mean, really, this is kind of what I'm looking for at the moment. Daily, we've been overbought here since about the 6th of February. As we continue to go up there, you see the volumes dropping off. A lot of overlapping price action. Looks like potentially, and I've got to pull this over here a little bit, but potentially like an A, a B, working on a C here. Either it's done or we got a little bit further to go up. So if you're down on the daily, I mean, I'm watching right now to, if on the daily, watching to see, do we break out above this swing high right here? If we don't, and we're dropping down below this low right here at 102.39, that would suggest this is A, B, C, and that breakdown below wave A, below wave B says, okay, we've stopped, right? We're rejected right there in that orange area where we're looking at, right at the weekly pivot, right? And so if I get a drop down below this swing low, then I'm looking for it to drop down below this swing low. All right? Ilya, what's up? Says not long, informative. I love that. I love it. I trade the E-minis for what's it called? S&P. Jeez, oh, freaking I couldn't remember what it's called. But I do that on my broker. I don't do that on TradingView. I don't trade on TradingView, guys. You can set it up to trade on TradingView. I don't do that. I trade on my broker's system. So yeah. Let me see here. So that's the dollar. Here's GBTC. Now, I bring this up Because if you guys will remember, everybody and their grandmother down here, this was at the time, this was back here in November, where everybody was, Tesla was dying, ADA was dying, GBTC was going to die. Remember, GBTC was going to be sold off, and all this Bitcoin were going to go in there, were going to be sold off, and it was going to crash the markets. Remember, that was all the nonsense? And I told you guys, as far as GBTC go, I said that was stupid. I said they make like $300 or $500 million a year in management fees. The worst thing that would likely happen would be that GBTC would be sold off as a whole, so somebody else could take it and make a lot of money with that. That's what would happen. It made no sense at all that they would liquidate GBTC and sell all the Bitcoin. They would have lost so much more money, right? It makes no sense. So we talked about that, and I said it looked like a good buy, right? Look what's happened, guys. I said the same thing, about Tesla. Tesla went a little bit further, but then it went up. We talked about ADA and how that looked like that was probably bottom. We talked about Sol. And how that was bottom there at the end of December when everybody else was saying, it had to die off because FTX, blah, blah, blah. What other ones did we get, guys? FTM. All these ones where everybody was very, very bearish. It had to be the end of it and whatever. And all these have made such great strides higher, right? You guys, you got to stay away from people who are extremely, bearish after you had like a year of a decline, right? You got to be careful at that point. It doesn't mean that it can't go down further, but it means, man, oh man, a lot of people are going to get caught thinking it's going to, and it won't, right? I told you guys, one of the big secrets of trading is when you've been in a market for a long time, like you've been on a year or two rally with a bull market or like a year-long decline, right? If you're hearing big bad news, like for instance on a decline, right? If you're hearing big bad news after it's been declining for a year, and then price really isn't doing anything negative, or worse yet, or even better yet, I guess, it's rallying, even though you have that really negative news, that's one of the things you look at to say, okay, there may be a bottom in. Because what that shows you is that those people with the short-term hands, right? What you guys refer to as weak hands, right? The ones that are short-term traders, or the ones that are going to get scared out, right? What it's showing you is they don't have enough in the market anymore to stop price from doing whatever it's going to do. Because if they did, then when that bad news hit, they would all be selling and price would go down. Instead, price either stays flat or goes up. It's gone up actually, right? So, these are things to look for. Same thing at the top. When you've got great news at the top and price is barely moving higher, understand, because and what you want to look for then is a lot of volume coming in at the top, but it's barely moving up. Understand you're being sold into. Get the heck out. Easier said than done. These are things that are going to take you a while of being in the market to really understand when they're happening. But just know, I'm telling you now, those are some of the things you look for. A lot of people online, they talk about, trader sentiment and whatnot, right? And, everybody's so bearish. Oh, everybody's so bullish. Most of that's just BS. Most of it, people don't know what they're talking about. They think because their feed shows bullish or bearish or whatever, that's what everybody is. Again, I keep telling you guys, your social media feeds are curated for you. They're sending you what they think you want to see, not necessarily what's really happening when it comes to trading, right? So yeah. So just some, hopefully some stuff you guys will pay attention to. You can see that you got this gap up through the pivot on the daily here. You've got, as you can see here, your money flow index, right? You're trying to cross bullishly here, down below the mid-range here. So you want to see that cross bullishly and pop back up above that, which should then carry this above this swing high here. This looks like, 1, 2, 3, 4, 5. So, and this looks like A, B, C. So this is probably, if this is 1, 2, this could be 3 with A, B, C as a flat. And I'm not even, see, this is what I think. You don't even have to count everything, guys. You learn to look at things, when you've been doing, in this case, Elliott wave for a long time, right? You look for things. Again, I saw a 5 down here, back up above the pivot. So it suggests that maybe there's a flat going on. Again, it looks like ABC, ABC, so that would be a flat there. If I look here, 1, 2, potentially 3, 4, right? But we do have this one here. maybe this is 1, 2, 3, 4, 5, and this is 1 with a flat as 2, which would give us a pullback still of almost 50%. So the good thing about this is, in either case, we should generally be looking for a breakout higher here. And if we do, that means we've got one of two things. Either this is wave 5, right? And if this is wave 5, this should give us a target up here of 1518, right? Minimum expected target. It could go larger, it could go shorter, but here's what we look for, right? But if this is a 1, 2 here, right? Well, then all of a sudden, we could also potentially, in that case, we would have this much larger target up here. A wave 3 up here at 1886. So what does that mean? Well, that means you don't have to know which one it is, guys. All that means you have to know is if you're breaking out, there's your first target. If you continue to break on up through that, that's going to be your next target there. And it means that not a wave 5, but maybe a wave 3 is in progress here. You guys, as traders, you're always looking for, oh, but I got to know. You don't have to know. You just have to understand the direction of the trend and the likely targets along the way. And I hope that's washing all that I need to know stuff out of your heads, because that's going to lose you a lot of money, because you're going to be sitting there paralyzed. You won't be able to enter a trade because you're so worried. Well, it looks like that, but what if it's this? Guys, I've talked to for years, right? Given this right here, they won't even enter because they don't know if it's this or something else higher, right? I mean, how silly is that? If you think about it, right? Whether it's this or this, in either case, you're making money, right? But most people struggle with that. If there isn't some kind of definitiveness in their head, they have a lot of trouble getting in, even if it's in the same direction. This is that idea that trading's simple, but it's not easy, right? You have to get through all that emotional, all that psychological stuff that's holding you back. So yeah, I mean, if we're popping out higher, I mean, that's, what I'm looking at as we're going there, just based on this, daily here. What do we have right here? Let me kind of zoom in a bit. Well, that just got weird. Let me come a little bit more. Just trying to get a little bit more clarity here. This looks like 1, 2, 3, 4, 5 potentially. For right now, I'm looking for a pullback. As long as that pullback, finds support at or above the hourly pivot, I'm looking for a breakout here. And if we can get that, I'm looking to quite possibly go long toward, this target or that target up there. Well, again, still watching this as kind of like the invalidation level here, right? I mean, let me see. I mean, I guess could maybe be a 1, 2, 3, 4 as a triangle. And then 1, 2, 3, 4, 5. And then it's ABC down, ABC up, and then 1, 2, 3, 4, 5. Gives you this large expanded flat here. Here it looks like 1, 2, 3, 4, 5. I mean, it looks like a leading diagonal. What we got here? 1228, 1228. Could even be still part of it. It could be A, B, C is 1, 2, A, B, C is 3, 4, A, B, C is 5. Again, so dropping down below this swing low right here, basically it's this pivot. If you drop down below that, that invalidates that. But if you can continue to find support here and break out above this right here at 1208, that should signal that you're out there, because that locks in 3 waves down, right? So you get a 5. So you go A, B, C is 1, 2, A, B, C is 3, 4, A, B, C is 5. And you have a leading diagonal up toward this swing high area here, right? Potentially up toward here. And then you look for that pullback, potentially you've got the high volume node right here, right around the 61.8 at $12. That's in that wave 4. So again, wave 1, Wave 2 pulls back to wave 4 of the lesser degree, and then we break out. So I think there's a lot of good potential possibility in that right there. Deadly, what's up, man? Let me see here. Not yet. I haven't looked at Bitcoin yet. I'm about to get there, man. Brady says, my feed tends to get super bearish at support and bullish at resistance. It's wild. That's because most of retail tends to get that way, right? Yeah, just be careful with that. Let me see here. You posted a chart from Trend Spiders the other day showing the probability of new highs in SPX. If that happens, does that also include the likelihood of new all-time highs in Bitcoin, or would SPX make new highs, but Bitcoin only puts in a macro lower high around 60K? Oh, no, I think, first of all, stocks are a lot further ahead, right, than what Bitcoin is on the reversal, right? That said, if I was looking for a specific index that I would be watching for, it would be, as we've been watching, would be the NASDAQ, because that's a tech-heavy stock index. And so that would be my preferred gauge to watch with Bitcoin. But yeah, I think if we're getting new all-time highs in stocks and we're getting new all-time highs in Bitcoin, it doesn't make a whole lot of sense that Bitcoin doesn't do that, right? Because new highs and new all-time highs in stocks means risk off, and risk off, people tend to look for the highest potential return, right? Because again, people are like y'all once were, or maybe still are. When you came into to crypto, you were looking for the quick, easy money, right? That's what people are always looking for, which unfortunately also is the reason why most people end up losing a lot of money. But yeah, I would definitely say if stocks are getting new all-time high, I would expect crypto to as well. Yeah. Again, guys, remember my big reason for the idea that maybe we've got new all-time highs coming in for stocks is because we never got to blow off top, right? So we'll talk about that here in a minute as well. But let's go ahead and jump on over here to Bitcoin, right? So Bitcoin, this is what I'm looking at. And so I've actually got this right here as potentially your 3, your 4, and then 1, 2, 3, 4 is a triangle, 5 gives us 1. That interior subwave 1 of wave circle 5 terminates around the swing high. And then 2, and then 1, 2, 3, 4, 5 gives us 1, ABC, ABC, 1, 2, 3, 4, 5, right? So it looks like a flat, expanded flat correction here, almost at the 70.5 retracement. So what am I looking for? Well, right now I'm looking for an impulsive breakout above the 15-minute pivot. That's going to signal, okay, maybe wave 2 is complete, or it is likely complete. And then we want to see a breakout above what would be not because this is the swing high, but because it would be sub-wave B. You'd have A, you'd have B, and you have C, right? So you break out above wave B, and that completes that correction, right? So I'm looking for a breakout above this swing high here at 25,288.88 here on Coinbase to signal, okay, wave 3 is in progress. Wave 3 has a minimum expected target of, I think I got to change that. Let me see here. This went down a little bit more. Let's see. Yeah, I got to change it just a bit. Of 26,372.60. 20. Yeah. That would be my 3 minimum expected. And then that gives us a minimum expected wave 5 here at 26,865. 26,865. 75 there. Which means, we kind of end right around the EQ of this blue supply structure, which is usually what we kind of expect. Now, here's the thing. This is the initial, this is the minimum expected wave 3. The secondary target is this wave 5 target for wave 3. So we could see that. But this would just give us parentheses 3, right? 1, 2, 3 of circle 5 of Roman numeral 3 of this larger circle Roman numeral 5 heading up. So this sets up the stage for a rally into 30,000, guys. Okay? This sets up a stage of a rally into 30,000, which again is something I talked about at the bottom there, right? We looked at the potential of getting rejected at the pivot, right? It's right around this kind of target area, right? But I talked about, remember when we were doing it, I talked about these large candles, and they're called inefficiencies, right? Because price just moves too quick through it. It gives you a low volume node. And price gets sucked through the low volume node into the next, usually the next higher volume node, right? So again, you've got it right here as well. Could suck us right into 30,000 there. You got it again here. Could suck us up into 40,000 up here, right? So possibly the count we're looking at here could be this overextension of wave 3 in here up to around 30,000, maybe 32,000. Wave 4 pulls back to the pivot. Wave 5 terminates right around R1. That gives us a wave 1 up to the R1 on the weekly, wave 2 down to the pivot, wave 3 on the breakout. So that's what we're watching here. Do we get, rejected right here and then, change the count a bit so that we get 1, 2, 3, 4, 5? Or do we get the breakout here and get like a 3, get a 4, and a 5 up here to give us 1, and then 2, and then back? So that was what I was talking about down here was, we would look for the rally into the pivot initially, but we could potentially see it rally to this 2930 area, this confluence right here, this kind of sideways movement right at this support, or even up here around 40,000, which gets us into this area, which has become the R1 pivot on the weekly. That's what I was talking about, when we were lower and looking at possible targets on the way up. Let me see here. So ascending triangle. So that, what people are looking for, let me kind of get in here again. Right? I think you guys are looking right here for the ascending triangle, right? So it's like something like this here. And then this kind of thing right here, right? I think that's what you guys are talking about, right? So target based on the height of that. Just grab something real quick here. More or less kind of around that 27,271 area. So if wave 3 were to overextend up toward this wave 5 area, that would give us wave 5 of 3 right around this R2 hourly pivot, which gets us just beyond the pattern target on that. So yeah, I mean, that's potentially something to look at there. Sure. It's just a pattern target. So yeah. That's something possible as well. But again, I think overall we kind of head up. You can see here, this is the 2 hour. You can see that we've bottomed out and oversold here, trying to rally and cross bullishly on Stoch RSI there. Let's see here. You can see potentially a higher low maybe forming here. Oh wait, it would have to be a lower. Let me see a lower low here. What is this? This is 43.21. 43.21, so about the same. So that would work as well. So if we were to close out this 2 hour candle in RSI right about where it's at, which is flat while we've got higher lows, and that's in 9 minutes, that'll give us bullish divergence off the lows. Yeah, it doesn't have to be hidden bullish divergence. It doesn't have to be, lower highs and lower lows. It can be equal lows here. That gives you the same effect. Let's see here. Let me kind of catch. Hey, Brady, you're welcome, man. Definitely. Let's see. So, this is kind of where we're, looking at here. The other thing you guys can look at structurally is you've got this sideways here, right? Which provides kind of this base. And then we drop down and we've printed another base on top of this base, right? And we rallied up strong and we came back and retested this base, right? And so we're kind of building yet another base on top of this base, which usually leads to further rally. So structurally, you see all this sideways here? This is a base. And we rallied up through it strong, and we've came back and we've retested it. As we're kind of rallying, we're getting higher lows toward that resistance. If you're looking at pivots, we came in sideways between the pivot and the R1. We dropped down to the pivot area and then rallied up. Made a slightly higher high here, so it looks like we should break out and continue higher. Again, notice we just dipped into the previous demand structure over here, demand cluster over here. And look at that, boom, popped right back out. Grabbed a whole bunch of liquidity and shot back up. Left this large lower wick. Rallied back up, broke back, came back into this demand cluster here, and we're trying to leave a wick and rally up as well. I mean, you can see that as you're getting through here, you can see that your volume's picking up, but you still got these tiny little doji candles. It's not, it doesn't matter so much the height of the candles themselves, guys. You're looking for the candle spreads inside them, the candle bodies. And so you get this, you have this one right here, this big, comparatively, this big supply spread candle here, right? With this volume, and look how volume's ramped up. And you continue to get these little tiny dojis right here at this support level. Now you got basically almost a dragonfly doji almost trying to print here. After it grabs some more liquidity down here. So, I mean, to me, it seems like we should be rallying up and breaking out higher. So just different ways to continue to look at it, guys. Whether you want to look at pivots or structure or wave counts or patterns, you see they're all kind of saying the same thing, right? That confluence in what it's saying doesn't guarantee that price is going to break out higher, but it makes it a lot more likely that it will, because you've got a confluence of factors, of bullish factors at different ways of looking at it in the same area that are all kind of coming together. So, I mean, I would be long looking for a breakout, honestly. Stop loss right below the swing low here. You can get in at 24,564 right now. Stop loss at 24,278.49. This is on Coinbase, of course. But yeah, I think there's a lot to be said for that. Let me see here. Data, what's going on, man? Can I show again the Bitcoin count in the low time frame right there? Yeah. Basically, you're looking up toward 30,000. If this count is correct, which it seems to be, you're probably looking minimum, 30,000 area, potentially up toward the 38, 41,000 area. So yeah. Again, the idea of that would be the impulsive breakout above the weekly pivot, which is just right around this area. That would kind of suck it up through that low volume node up into the high volume node up there around that 40 area, R1. Let me see here. Hank says the Litecoin on the 12-hour is hinting it may do a cross on the stochastic below 20. Since Litecoin is the canary in the coal mine, that would be nice and pretty safe long too. Yeah, I mean, I'm still loving longs for Litecoin, guys. We talked about, 100 plus when it was down around 50. Remember? Again, another one of those ones where everybody's like, oh, no, blah, blah, blah. Why would anybody use Litecoin? Blah, blah, blah. Sorry, guys. But seriously, that's what it sounds like to me. Everybody's all worried about why would somebody use it? Stop worrying about that nonsense. If Bitcoin's rallying, pretty much every other alt is going to rally with it. Rising tide lifts all ships. Stop worrying about your personal opinions about how much you hate something. So it can't, because of how much you hate it, it can't possibly go up, right? It's such nonsense. You're just setting yourself up to miss money or to lose money, guys. Same thing was said about ADA. Who cares? You guys spend way too much time talking about fundamental analysis, which you don't understand. And you know what? If that hurts your feelings, I just said that, then get out of trading. I'm not trying to hurt your feelings, but I'm trying to get you to wake up. Stop, you guys, stop worrying about fundamental analysis. It is inferior to technical analysis. I'm going to say it right now. And you should know that because pretty much anybody that's doing fundamental analysis gets it wrong a lot more than they ever get it right. Because there's too many things going. There's too many parts moving, guys. You know why my macro analysis is usually pretty dang spot on? Because I start with the charts and then I work back what I understand about macro econ. That's why. It's not because I've got any special way to look at macro, in and of itself. It's because I use the charts and then figure out what the narrative is based on the charts. If you've been following me for the 5 years now, it's pretty damn right on. But that's why. That's the big secret. That's all. All right? Let me see here. Yeah, hourly's about to print bullish engulfing. Look at the 2 hour here. Got a hammer candle going on, right? Large lower wick. Volume creeping up on you there. I mean, it's setting to, break across bullishly there. 1 hour is going to get you that bullish engulfing. Let's look for an impulsive breakout above a 15-minute pivot. But again, I told you back then, I would have already, been into buying and look for that long, right? Stop loss right below the swing low here, the wave 2. So, yeah. FA is a lot like tarot cards, Michael, yes. Price always includes the macro before it happened. Yeah, it's not, listen, guys, it's not that macro analysis doesn't exist or whatever. It's just that how do you understand it, right? How do you read it? And a lot of times we read it with the way that we think it needs to go happen, right? So there's a lot of your bigger names out there right now, right? Some of them I'm friends with, right? And they're looking and they think, oh, we definitely have to go down to 12,000 or lower right now. But that's because they believe based on the macro, what they think normally happens with macro, some of they ignore some of the stuff and they get some of the other stuff that usually says, okay, if this is happening, then we should expect to go lower, right? But none of us have been, not even Peter Brandt, I don't think, was alive in 1929, was he? I don't think so. He definitely wasn't charting back then. But what I'm saying is, if this is supposed to be a grand super cycle top, right, then we should have a blow off similar to what we had in 29 before the Great Depression. Everybody's like, oh, this is the Great Reset. This is all. Well, I think it's coming. I do believe so as well. But why would you expect such a harsh breakdown if you don't have a harsh break up first? Think of it in terms of physics, right? Opposing forces, right? Equal and opposite reaction, right? Why would you just roll over and expect some huge decline? See, that doesn't make a lot of sense. I'm not guaranteeing you that it can't happen, but to me, if I'm looking at that, I'm going, it doesn't make sense. I would expect a big action to lead to that big reaction. And we haven't had that big action, which again is why, for quite a long time now, I was the guy saying, when we got to the top, look, it was all-time high. We had the big depression coming in, right? But we didn't get the blow off top. We got a rollover, and I've been talking to you guys about that ever since, and about how that likely means that we could see a new all-time high in stocks, which would also be in crypto prior to that, right? Does that make sense, guys? That's why I'm not just pulling stuff out of my rear end here, guys. Using critical thinking skills. This is what we got to do as traders, right? Stop worrying about what somebody else says. I've got some replies on some responses that I've made on Twitter, right? And people have replied to me going, I don't know, this case that so-and-so making seems pretty legit, right? Well, okay. But again, you don't know what you don't know, right? And if you can't think beyond what's happening locally, how can you get further, right? So when you look at that, you look for this, yeah, things are looking kind of crazy and seems like we're getting weird info coming in, right? From our lagging indicators, right? From the Fed and everything. But what if that's what happens in the final stage before the big drop? So yeah, people are like, oh yeah, we're going to get the big reset, whatever. And I think we are as well, but maybe it doesn't happen yet. Maybe it doesn't happen yet. And here's the other thing about that. What's interesting about that is, remember, this would just be a wave 3. So we'd have a wave 4 Depression-S type thing, right? For a few decades, right? And we'd still have a wave 5 to go. What if the Great Reset doesn't happen until that super cycle wave 5? Well, then they're really far off, right? A lot of us probably won't be around when that happens. Just saying. So we have to think beyond the simple, guys. We have to think beyond, when it comes to macro, the simple, right? Because the simple thing is say, oh, well, last time this is what happened, so it needs to happen this time. But if we're as advanced as we are with everything, maybe we get crazy stuff like this before it finishes up, right? Just some thoughts, guys. Let's see here. Let me catch up with you guys real quick here. Yeah, Great Reset could happen this year or get pushed back a couple years. No one can kick the can down the road better than the good old USA, right? But like I said, what if the Great Reset is wave 5? That would be, if we're looking at it correctly, that would be decades and decades and decades off, right? So let me show you guys what I'm talking about here. You guys are about to get some. If you haven't seen this before, this should be interesting, okay? Let me show you what I'm talking about. All right. Kind of working on some counts and stuff here, some ideas here, right? Just off of this right here, the idea that maybe we're just working still on a wave 5 of this rally off, right? But here's the thing. This is the dot-com bubble. This is the great financial crisis. This is just a flat correction. A, B, C is what it looks like to me. Okay? But let's just keep on going out. Let's move this out to 12 months here. Make these yearly candles. This is where things get interesting, okay? So this was 1929. This was the roaring 20s into the blow-off for the drop down, right? Here. This is what we have here. This rally is less than this rally. This is a greater degree of rally here than this. This is not as sharp as this, right? This is what we're kind of looking for. This thing right here, though. Blow off, which comes down. Now, here's the thing. As I've told you guys, this took about 3 years. From 1929 to 1932 till it hit the bottom, right? But it took until the mid-50s, right? Like a quarter of a century later before you actually got a new all-time high, right? But here's the thing. This is a sharp correction down. So if this is, 1, 2, and we're working on 3 and then 4, 4, theory of alternation suggests that we should have a lot more sideways rather than the sharp move down. Theory of alternation in Elliott wave says that if you have a sharp ABC, right, zigzag, you should have a triangle or a flat or some kind of thing that does more sideways. Okay? So, whether this is or isn't the top here, whether we've still got a little bit higher still to go, and then we finish wave 3, and then we have wave 4, that wave 4 should spend more time sideways than this did coming down to finish that correction. So that means we could have more than 25 years of sideways before it hits a new all-time high. After it makes potentially this next all-time high, right, where it finishes wave 3. You can get a wave 4 triangle that lasts 50, 60 years. I know you guys just went, right? Or even, like I said, a flat correction. ABC down, ABC up, 5 waves down. Still take 40, 50, 60 years, maybe more. Crazy, right? My kids are going to be grandparents. How's that make you guys feel? Yeah, that's my first thought is this area right here would kind of be around where we'd be looking for it to pull back to. This area here, 7,700, 7,600 kind of area. 7,500, around there. I know what you think, Hank. It's all good. But nonetheless, things work in cycles, right? So it gets kind of interesting now. I can look at this and I can go, yeah, around this area is kind of where we would expect that, right? But here's the thing. We rallied up to what? 36,952.65? We're pretty close to 50,000. And so to rally up higher seems like we would probably rally or try to hit that 50K mark with the Dow. At least to kind of maybe finish that off. But again, I would expect some sort more of a blow off top than a simple little rollover that we had. Now, that doesn't guarantee that it has to go up higher, guys, but it's just when you say, well, Chris, why aren't you buying this that there's still lower to go? Well, that's the first step, right? The second step is this idea that, well, can't get rid of all this, right? Is that this looks like 1, 2, 3, 4, I'm sorry. Yeah, so 1, 2, 3, 4, 5, right, as a leading diagonal. And then ABC, and then 1, 2, 3, 4, 5 here. So it looks like an ABC. We've got 3 waves down and we broke out above it. The only way this doesn't become corrective and continue down lower, or the only way it does now continue down lower, is if this ABC is a W and we get an ABC up for an X, and then we have an ABC down for a Y. The other possibility, right, is then, okay, well, are we in some sort of, could we be in some sort of extended wave 4 here, right? Is this maybe ABC down, then we get ABC up, and then we have 5 down for a flat? Or is this ABC is A, ABC is B, ABC is C, D, E as a triangle? Same thing I've talked about, guys. If you're new, welcome. But the problem with the triangle or with the flat there is that it would make whatever's the wave 2 over here is really small and it's really outsized. So a lot of Elliott wave is having the look. Usually waves 2 and wave 4, they gel with each other, right? They look like they belong. It doesn't look like little tiny wave 2, big huge wave 4, Yeah, I just did that for y'all. So yeah, that's what the idea that maybe there's a triangle or a flag going on. That's why I don't think maybe. I mean, it's already pretty big here for what would be, 1, 2 here, right? Now, again, the other possibility is maybe this is a 1, 2 rather than 3, 4, and 5. If this is a, like a 1, 2, 3, 4, 5, well, then this should we should have some sort of blow off top thing happening this year. But if this is only, this is the larger wave 4, whoops, and this is wave 1 and 2 of the larger wave 5, then this could last for another 2, 3 years playing out, going up higher. Because this would only be 1, 2 here. And in that case, I could see a flat happening. Not a triangle, you can't have a triangle as a wave 2. But I could see ABC down and then ABC up and then 5 more back down. Like the rest of this year, just sideways. Hank loves those. He loves talking about all those possibilities. But yeah, I mean, I could see that maybe as a flat here. If this is a 1 and this is a 2, 3, 4, 5 for 5. So yeah. So yeah. Would you be surprised if there wasn't a great reset anytime soon? That's a good question. So we think of the Great Reset in terms of credit, right? The idea that credit just gets so far ahead of itself that it can't sustain itself, right? But if we look at what Japan has done since the lost decade, right, in the 90s, I mean, they're doing the things which we've just now started doing, right? And they haven't collapsed. So I don't know. I think there's an argument that that the Great Reset could take a while. Again, that would be the idea. Maybe we've got a 3 and a 4 and a 5 still to come, right? Yeah. Because if we get the Great Reset, then, I mean, you guys shouldn't be excited about that because life's going to suck. Life's going to suck, guys, unless you've got real stuff, right? Like real estate, property. Maybe Bitcoin, but guys, I'm going to tell you right now, Bitcoin has not been challenged in that environment. So you're just guessing. You're just guessing. We know real estate tends to be valuable as life goes on, right? As they say, they're not making any more, right? I don't know. Maybe they do with platforms in the ocean or, or flying fortresses or something. I don't know. But the reality of it is, real estate tends to remain valuable, generally. Bitcoin may, but it may not. We don't know for sure, guys. Let's be honest. So, a great reset's going to suck, guys. I just want you guys to understand that. Everybody talks about it like it's nothing. It's a big nothing burger. Oh, it's not a nothing burger. If it happens, life is going to suck. And it's going to suck most for those at or near the bottom. For the poor, the retired, on fixed income, Social Security, stuff like that, that's where it's really going to suck. So, you guys got to keep that in mind. All right. Let me see here. Yeah, Great Reset, Depression, War. Yeah, exactly. Remember, guys, we've talked about it before. When we look at Russia's invasion of Crimea or the annexation of Crimea there, and then, of course, with the Ukraine thing, right? That all happened on lows in its stock market, guys. Again, the sentiment, what people feel in general, it shows itself on the charts. It's not that the charts happen and then people feel a certain way. People feel a certain way, and that presents itself in the charts. It presents itself with business owners injecting injecting capital into the company, or firing people, laying off people, toning down production. Right? Those are the things, and those then show themselves on the chart, right? When we feel happy and we feel good and we feel secure and safe and risk off, we tend to put money into the markets, right? But when we don't, we take money out of the markets. Especially those that have a lot. And so, I think, that it's, don't, a lot of people out here, romanticizing the idea of this great reset, whatever, because they think Bitcoin's going to, keep them safe and whatever. But the reality is, guys, it's going to suck. It's going to suck hard. And if you can't wrap your head around that, work on it. Because the last thing you want to do going into the Great Reset is thinking it's anything other than going to suck. Like the worst kind of suck you've ever known in your life. Okay? Just some thoughts, guys. It's everywhere, man. It's not just the West. It's everywhere. It's all throughout history, man. Right? Philip Swanee says, I will just continue to build my citadel. John Cross says, situations like that cause revolutions. Yeah, different thing. Yeah, it's all that stuff, guys, right? So this is, I think this is kind of what you look at and you go, okay, well, shoot. Again, we had what may be potentially a flat here. Well, that is that right there. We have it over here, right? We have it quite potentially right here as well, right? So, again, A, B, C, right? And then maybe 1, 2, 3, 4, and then we're working on 5 here, right? That's kind of how you look at it. You go 1, 2, you go 3, 4, and you go 1, 2, 3, 4, and you're working on finishing 5 up here. But that gives you just your, you're over here. You're 1, 2, 3, 4, 5. And now, not way up here. I don't think it's 75,000, but I just mean, you get your wave 3 up here, wave 4 and some sideways, and then you kind of do your wave 5. You finish off. Your wave 5 should be a heck of a blow off. Grand Super Cycle wave 5. Yeah, should be huge. But, again, that's what we're kind of looking at, I think, here. So I think there's a good case to be made for either we've got one more to finish up to finish wave 5 of 3, and then we get the big 4. 1, 2, 3, 4. Or just ends up being wave 1 and wave 2. Finish up wave 2, and now we're looking at wave 3, 4, 5 of 5 still. Which could also, overextend, guys. Here, listen. Real quick here. I didn't plan to teach you all this much, but some of the stuff I've talked about before. But listen. Generally speaking, right? And I've said this before. Commodities are generally their fifth waves or their largest, biggest waves, right? Biggest, strongest waves. And that is because people tend to buy commodities when they're fearful that they won't be able to buy them anymore, right? Oil, gold, silver, whatever, right? And usually that's a product of war, famine, stuff like that, okay? So those things happen, people get scared, they go load up on the commodities, right? Which is why in charts, if you're using Elliott wave, commodities, their fifth waves tend to be the biggest waves. Stocks, equities, right? Their biggest waves tend to be their third waves, right? Because everybody's all euphoric or whatever, and then fifth waves, they kind of fallen off, right? But here's the thing. Once you're getting above, like you get in here, right? And you go, okay, well, and you go here and you go to your degrees, right? And so once you start kind of hitting this primary area, you see there's a grand supercycle way up here, right? Again, that's the idea. 1, 2, grand supercycle, okay? 3 is what we're coming up to. We get a 4 and then we get a 5, right? So, and don't worry about this chart. This isn't what I'm looking at here. I just got things thrown on there, right? But in this case, when you get to this point that you're up here at your primary or cycle or higher, usually it's your fifth waves that become the blow-offs, that become the bigger waves. And they do that because everybody's euphoric. It's a fifth wave of a fifth wave of a fifth wave of a fifth. See what I'm saying? People, they feel that euphoria. It's what happened here. The roaring 20s. Think about the roaring 20s here, guys. Right? 1, 2, 3, 4, 5. Roaring 20s, right? Yeah, kind of overlapping, going up here, and then boom, boom, boom. Everybody just, it's never going to end. So when you get to these large degree wave counts and whatnot, your fifth wave tends to usually be the biggest wave, the strongest wave, because people believe, oh, it just can't possibly end. Okay? So that's what we're looking there. Let me see here. War isn't the reset. War is propping the system up for more of the same. War is just the result, guys. When people are depressive and feeling down and whatever, I mean, that leads to war generally. Usually when you're excited and happy and euphoric and jubilant and whatever, you don't think about going to war. You're too happy. You're too with everything else. It's when you feel downtrodden and upset and beaten and whatnot that you go to war. Depression, right? All right, let me see here. Let me find you guys a chart here real quick. Coin looks interesting. Look at that. So we have this big move up into this rejection, right? But look, it's just 3 days right now of overlapping dojis, right? So it looks corrective. This is the anchored VWAP, by the way, here, guys. That's what this is. Right there at the EQ of that, right? So if this is 5 up, a wave 1 here, if it is, pull back about 61.8. I mean, I'm looking for a breakout above this swing high here at 67.90 to suggest to go higher at that point. That'd have you going up here to $100 at least, right? I mean, I don't even have to count what the waves are here. Potentially 110 up here at this, right around the EQ of this supply structure up here. So, yeah, I mean, interesting things coming out. I mean, so minimum, but potentially breaking out higher, right? Remember, if Bitcoin's rallying strong or whatever, I mean, Coin, Hut, Riot, Mara, you know, all those different, Migi, M-I-G-I, Migi. Anyway, they should all be rallying with it. So be sure you're watching for that stuff. Probably even NVIDIA, you know, cards, right? Graphics cards. Stuff like that, yeah. Let me see here. Let's look at FTM. What do we got with FTM? FTM still looking like I expected to look here. We're looking for a breakout above wave B here to kind of give us this target minimum up here at 80 cents, 80.8024 minimum expected, maybe to give us a wave 1. But again, you know, if Bitcoin's doing some serious kind of, you know, wave 3 continual, what do you call it? Subdividing, We can see this subdividing as well, heading up toward this weekly pivot up here at $1.25. We've had people swearing to you that the top was here. We had them swearing to you the top was here. And here we go. We keep pushing up, right? But those are extremely bearish. They think we still need to go down to 12,000 or more. And like I said, maybe they're right, but there's nothing going on with the charts that suggests you got to keep on heading down lower right now. Right? They're like, oh, you hit resistance, you have to go down. But that's because they're so into the whole idea that we've been going down like this, right? With whatever they're looking at, right? Bitcoin's been a year of that move down, right? Almost. So they're still in that same mindset, right? They can't get out of that. They don't have invalidation levels. Guys, let me show you something here. Let's look at, well, shoot. I guess we can just look at, oops. All right, that's not good. Where are we looking for the chart? There we go. On the weekly, guys, look. Been talking to you since we've been breaking down here, since we broke to this new low. This is the weekly, the large time frame bearish market structure right here. This swing high at 25, 214 and 57 cents. How many times have you guys heard me say that over the last few months? So 25, 214, right? We've got 25, 288.88. We've broken out above that. So we had a high, a low, a lower high, lower low, lower high, lower low, lower high, lower low. We've now pierced that lower high. This bearish market structure no longer exists anymore. It's been invalidated. Well, it existed through this point. We are now in a bullish market structure. High, low, higher low, higher high, off that swing low. Again, the question is, do we rally into the pivot area, pull back here to about 21, 22, and then rally up toward the R1, or do we break out around 30, 31, pull back to the pivot, finish up here at the R1 area, pull back to the pivot, and then go up? As far as I'm concerned, those are the two most likely cases at this point. What changes that? If we pull down back over here, 17,000, 16,000. If we're getting down here, the odds are likely that we're going to head down lower. Until that point, though, the indicators are bullish more than anything else. Does that make sense? A peak above is breaking. Yes, it is. It broke the swing high. It's a new higher high. I don't know why you argue about silly stuff like this, Hank. That is the high. It doesn't have to close. It just has to break it. Because now that we've broken it, it is no longer it's no longer going higher high, or lower high, lower low. This was the higher high. This was the last higher high or lower high. We are now above it. We pushed above it. We printed above it. This is now, you can't go and go, oh, now we got a lower low here. Off that. Now you have to look and go, okay, well, if we do get a lower low, well, now it's a high, a low, a lower high, and then you'll get a lower low. I don't understand why this is so hard to understand. No, swing failures are a thing, yes, but that doesn't have anything to do with the price of tea in China or rice in China or whatever it is. The swing failure patterns have nothing to do with this bearish market structure. Period. You're conflating two different things. Yes, we could get one here, and like I said, if we did break down below here, then it's a high, right? Goes down to a low, goes down to a lower high, and then a lower low. This whole thing then becomes the bearish market structure. But this bearish market structure, this high time frame bearish market structure, is broken the second price goes ahead by 1 cent. Because that lower high has now been violated. There is no agreeing to disagree, Hank. You're a smart guy, Hank, you are. Step back, think about it a bit. You'll understand what I'm saying. Swing failure patterns have nothing to do with market structure. Okay? Not the bearish market structure like this that we're talking about. Okay, guys? Lord have mercy. All right. Let's kind of pull us back here. Oh, I want some follow through now. Come on. Let's go. We got that nice big candle. Let's see if we can get a breakout higher here now. Let me see. Thought I had another chart I wanted to show you guys here. Oh, there was... Is that the Ethereum? Yeah, the Ethereum chart. You guys were talking about Ethereum earlier, right, Hank? Look. So again, 3 take profits here. There we go. Okay. Right here at 27.22 to 31.74. And then up here at 37.75. And then up here at 44.77 to 54.34, right? Potentially, it hasn't happened yet, but potentially we could see a barrier triangle printing here. But what would we need to see? We need to see a rally up into the pivot, a rejection and a pullback, and then a breakout higher. You got to have 2 points on there. You can't just break up from here. If you just break up from here, it's not a barrier triangle. You've got to have 2 points. You got to hit up this area and then pull back. And the pullback, again, would likely be right here around 1,500 or so. And then you'd have to have the breakout higher. But if you do that, pattern target is up here around 45.50, which is the bottom of this third target up here, which is right around the swing high. So again, potentially getting 5 waves up to the previous swing high, first subwave before heading higher, right? Elliott, Ethereum continues to look like a clean, nice chart. But again, kind of like Bitcoin, it's do you get 5 up to the pivot and pull back, or do you get 5 up to the R1, pull back to the pivot, and then go? That's what we're waiting to see. Like Bitcoin, you have large inefficiencies here. You have large candles. So it could easily, if you're breaking out through here impulsively, that weekly pivot, I could see it suck itself up into that R1 pivot area. Should make sense, right? Let me see here. Hey, Christopher, yeah, man. Hey, listen, send me a message at christopher.inks@texaswestcapital.com. When we moved hosting providers, I sent out emails and messages to everybody that bought that course originally back then to let you know where you can access it. But apparently it looks like you don't remember or you don't have it. So just send me an email, man, and I'll send you back a link there. I'll need verification, of course, but I'll send you a link then to the how you can access it, okay? Yeah, man, for sure, for sure. Let me see here. So that's Ethereum there. Again, looking kind of good there. Again, my BLX chart, guys, same thing I'm still looking at here. You kind of got this structure. It looks looks similar right here. And so first thought is rejection at the pivot, right? And then pulling back again down toward this 21,000, 21,500 area, right? Because you get 1, 2, 3, 4, 5. 1, 2 pulls back to wait for the lesser degree and then rally, right? Which would be in line with this, except this one obviously went back a lot further, right? But the other possibility is that we do break on out here. We get up here toward this R1 pivot area, come back. Right now, the pivot's holding well. Or pivot, the inside pitchfork here, which is based off this 2011 swing low here, bear market low, up to the November 13 swing high, and back down to the bear market low in January of 15. As you can see, we kind of rallied off support here, rallied all the way up, peaked out above the high there, came back, tried to peek out, got rejected again, came down to the other side, and now we're looking to kind of see if we can continue that up. But overall, pretty good move so far. I don't know what else to tell you here. Again, weekly weekly RSI dipped below oversold only 3 times, right? Dipped into oversold 3 times. January of 2015, bear market low. December of 18, bear market low. And then this June 22 low here before we had what appears to be a terminal shakeout right here. Why would this potentially be different than these two? Well, because blow off top, rollover. So the distribution up here is different than what it was here and here, which could lead to the idea of why you end up getting this potential terminal shakeout here before rallying up higher. So yeah. So we'll see, right? But again, guys, we look at this and I'm not here trying to convince you guys, okay? I'm showing you what I'm looking at and why. I'm explaining it to you. See, most people are going to get out here and they're not going to explain it to you. Or they're just going to say, oh, just that's what usually is, blah, 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 right? But, I'm sitting here talking about, price and volume and price action and volume and pivots and potential analog structures, and stuff like that. Yes, we've got a bearish cross here on the weekly. What do you call it? Death cross. First time it's ever happened. We almost had it happen over here. But, is that a big deal? I'm not a big fan of these death crosses and golden crosses because they're always lagging, right? And so it's just now crossing, but we've already had almost an 80% decline. So, this is where you have to go in there and use, some common sense and kind of go, well, we've already had an 80% decline. The odds that this sends us to new lows, are very, very much small, right? They're very small. Doesn't mean it can't happen that we go lower, but I think if you say it's because of this, I think you're just missing everything else. Again, I don't believe that a golden or a death crosses mean a whole lot of anything. You can look back historically. You can look at the data. They're like kind of like a 50-50 thing, guys. They're not very, it's not like, 80 or 90% of the time they prove correct. They don't. It's just not. And so when I'm trading, you guys may have heard me say this before, I'm looking for things that are much more likely to happen, right? So not just because it may or may not happen. I'm looking for those things historically that have usually proven that things happen. But even with that, you still have to take it in context with what's going on at the moment, right? Again, trading's simple, but it's not easy, okay? But it can become not as difficult if you start learning correctly and how to do it, right? You pay attention to these things. You don't just blindly follow, large accounts online, or even me. I'm not a large account. I got about 30,000 people following me on Twitter. That's it. But, again, guys, like I said, we'd love to have you with us at Texas West Capital. But even if you don't, if you're here, I hope that you're learning something. That's the whole goal, right? Let me see. Fiboswani says death cross on a weekly is a joke to him. So a chicken crosses the street. Oh, no, I'm kidding. We're not going into that kind of jokes, right? Okay. So, there we are, guys. Again, as we continue to look at it, I think there's a lot to be said for what's going on at the moment. But we are kind of at this place. So, again, I think right now, if you're thinking right now lower lows, you're not trading correctly, guys. You're not trading because you've missed this huge rally up, right? And there's a lot that has to happen here before we even get to the lower low. So by ignoring what must happen here and just saying, lower low, you're just guessing. I had somebody ask me, what's the difference between conviction and emotion? Conviction? And I think what the answer they were looking for was like different things, right? But conviction is actually just the strongest type of emotion. Think about what conviction is. Conviction is, man, I believe this and there's no way you can prove me otherwise. That's what conviction is. That's just emotion, right? As traders, you can't have that. You've got to be open to different things happening. You've got to have invalidation levels. You've got to have validation levels, right? You have to know where you're looking. If somebody that you're following on your feed, and this is pretty much every bear over 100,000 followers, it seems like, that think you have to come on lower here, none of them have mentioned invalidation levels here. And I'll tell you what, if you think you got to go down here and your invalidation level is up here at 50,000 and you're not trading this up, you're an idiot. Sorry, I don't mean that. I try not to be really rude, right? But so many of y'all, you guys, you send me so many DMs about about how this person led you on to believe this, this, and that, right? And it's unfortunate, man. I wish I could shake your head back then and go, stop listening to them, but I can't. I get frustrated at people who are out there pretending that they know what they're doing in trading, pretending they're some great trader. Everybody is an expert in a bull market. Everybody is an expert in a bear market. Why? Because it's just a trend, guys. It's easy to continue in the direction of the trend. It's hard to notice the reversals. Like when I told you guys up here, this didn't have to be the top, but it was at least a top, and we were looking down here, right? We're down here looking for further up, right? The reversals are the difficult areas. You can make a lot of money down here, but if you can't get it figured out when these reversals may be happening, and you continue to trade against the trend here, you're going to most likely lose everything and more that you made here, trying to be right. Because the more times you're wrong, the more revenge trading you do, the more you're going to have to prove yourself right, especially if you have a following. You guys need to be aware of this. This is basic human psychology, okay? You guys have to be aware this is what's going on, because many of y'all are out there just blindly following these people. Or you're scared to change your own opinion that you put out there publicly as new information comes in and says, well, maybe things aren't happening the way you think they are, right? What do I always do, guys? I tell you, I say, listen, I think this is what's going on here, but we need to see this happen, right? We need to see a breakthrough this level. But if instead we see a breakthrough this other level, then that'll mean that we're wrong and we're going to continue up, right? I always talk about that. Every time. I never tell you this is definitely the bottom, this is definitely the top. I've been talking about this as a bottom here since June, right? As a structure here, and I've given you my analysis, my Wyckoff analysis, right? We've gone through it as we developed into a terminal shakeout and everything, right? But I've never guaranteed that this is the bottom. You just need to buy and that's it. Because that isn't how you trade, guys. And if that's how you're trading, I can all but guarantee you've lost a lot of money. You got to be smart about it, guys. You got to be smart about it. Okay? Stop getting caught up in what the Yahoos online do. This is about you and your money, right? So, all right, guys. I've got to go. I'm 10 minutes over already. As always, remember, the only thing you control in the market is how much you lose. So please keep working on risk management, guys. I'm telling you, if you're not doing it now, you are causing yourself to lose money that you don't have to lose. Stop. Stop doing that. Risk management is the most important thing you're going to do day in and day out as a trader, okay? Absolutely the most important thing. Bar none. There is no excuse. There is no argument. Drop the mic, period, end of sentence. That's it. And if you aren't treating it that way, then you're going to continue losing money. All right? Other than that, the second bit of advice I give you, don't enter a trade just because there's a chance. Look for a higher confidence entry. Look for a proper divergence. Look for, RSI and oversold and Stochastic RSI and oversold or overbought or whatever, right? Look at breakouts or breakdowns through key levels. Don't just enter because there's a chance, because you're scared you might miss it or you're bored. You're going to lose a lot of money you don't have to lose. And even if you're using proper risk management, that's still money you have to make back before you can make profits. Does that make sense, guys? All right, guys. There we go. That's it. Hey, you can join us at howtotradetowin.com. We'd love to have you there, especially on our mentor program, where we work weekly on the psychological and emotional issues that are affecting every trader out there, as well as everything else you guys get with that. So howtotradetowin.com/LMT. All right? All right, guys, if you're in Discord, I'll see y'all there in a bit. Everybody else, if I don't see you there sometime this week, I will see you guys then on Friday, 11 a.m. Central Standard Time. Take care.